brought to you by BASF and Pride Seeds. We're joined right now on RealAgriculture.com by Mo Agostino, market analyst with Farms.com Risk Management. Welcome today, Mo.
Thank you. Pleasure to be here.
Hey, Mo. Corn is, I guess, a real interesting story. Since August, we've in the futures we've dropped $200 a ton. I was looking on a couple sites this morning. Looking at right about where we are right now is definitely some support. Are we looking at a breakthrough support here, or are we going back up?
The last couple of days are new closing lows for corn, and so it doesn't bode well. I mean, if you look at the chart, we're in bearish territory. Corn prices since the peak in late August are down over 25%. Bear markets are usually categorized as anything greater than a drop of 20%. So we're in bear territory. Is the bull over? Is this bull market in commodities over? Some will argue yes, others will argue no. Some think that we could get a sustained rally into the beginning of 2012. They cite reasons like supply remains tight, demand still strong overall, and so the problem is that a lot of the big hedge funds manage money because of the issues we have globally today, which include Europe, debt problems, the U.S., you got U.S. elections, U.S. debt problems. What they were willing to pay for a price of corn in August, they're not as much willing to pay today, and they're not really as worried as they were in August. In other words, they feel that perhaps at some point in the futures there's going to be enough bushels to meet demand, and this price continues to move lower. I think a lot of the move is just basically negative psychology. I mean, the funds have actually gone totally short beans, wheat. They're still long corn, but not as long as they were in the middle of May or June. So I'm hoping that we can hold this. It feels like the market is trying to find a bottom, but with all the negative outside news, and I thought perhaps we could get a Christmas rally or year-end rally. That typically happens the week before Christmas, so we could still get it, but the likelihood it becomes smaller and smaller just because the negative sentiment or the psychology is so negative. I mean, you could take a contrarian view and say, hey, everybody's so bearish, it's completely oversold that we got nowhere to go but up. That's what a bull will argue, but a bear will say, no, nothing's really changed. And you could also argue this is largely macroeconomic move down, necessarily a fundamental move. But when I look into 2012 and we look at perhaps the amount of acres that may get planted in the U.S. in 12 on corn, and if in fact, since July, USDA has reduced demand by almost 900 million bushels. It's a lot more than it was in 2008 when demand was reduced by 560 million in a recession. We're not even anywhere near a recession. I think the U.S. economy is actually showing some signs of the economy picking up steam. If demand has been reduced that much, then any stocks today that look quite tight, supply looks quite tight on corn at 848 million, could easily jump back up to about 1.5 to 1.7 billion bushels. And to me, that spells a lower price, particularly for the second half of 12. Not necessarily the first half. The first half, there's still a lot of things that have to happen to get to the bigger supply numbers in the second half of 12.
Yeah, and as a producer holding inventory, this is the kind of when you have a market that could be $200 higher or $200 lower. This is not the market to be trying to market 80% of your crop at one time and trying to guess the bottom of the top.
No, I mean, you missed the top. The top was in June, July, and August. If you do have bushels in storage, I don't particularly like to sell at market lows and don't like to panic per se. I think the market will provide you a better opportunity in the first or second quarter of 2012. So if you don't need the money, I'd be patient, but you have to have a stomach because the market swings are going to be wild.
Yeah, and you say there is a fundamental, when you look at corn by itself, there are some fundamentals that do possibly argue for some higher prices, or do they lead you more to the lower side?
Short term, perhaps to the higher side. It depends on whether, if you look at December 12 corn, we're down to about 539. You got to ask yourself, are we buying enough acres there for 2012? Are we buying the 94 million that some of the private analysts estimating? Some will say, well, with beans down to, soybeans for November 12 are down to 1128. I guess we are. And others will say no, because input costs are still relatively high. So corn will still need to go back to 6+ in order to buy those acres. So I don't think this game's over yet. I still think short term, 3 to 6 months, probably a higher price than where it is today. Markets probably have factored in the worst case scenario, which is really a recession in Europe. How does it impact us globally in the U.S., North America, or China? Good question. I think it's a slight trend, but I don't think it's a big issue. Long term, though, I become very, very bearish on corn prices if supply does come back, but that's largely to Mother Nature.